All right. Well, I'm going to ask you a question.
Yes.
What if I told you there's a single investment that turned $900 million into $111 billion in 10 years? How would you feel about that?
I would say that's got to be one of the tech giant companies.
Yeah. Well, maybe you read the outline because you are spot on. This is Google made a $900 million investment in SpaceX, and this was 10 years ago. And now, depending on obviously if and when SpaceX does an IPO, that stake could be worth $111 billion. So
we've got ROI right there.
Good ROI. Yep. We got an article here that we're going to show that just talks through back in 2015, where it was the headline from the Wall Street Journal: Google nears $1 billion investment in SpaceX. So actually, Google did $900 million of that, and then Fidelity has a venture capital arm. They did $100 million of that. Those were the two that went in at $1 billion.
Wow. That's foresight to see where that's going.
Yep. So that turned in, again, 10% of the company, and that was at, again, in January 2015. And now there's rumors that SpaceX and Elon Musk has confirmed looking towards an IPO to hopefully raise around $30 billion or so. Valuation, we'll see, up in the air. But, there's feelers that maybe it goes to market at $1.5 trillion. And again, this would raise $30 billion for SpaceX. So this would potentially edge out Saudi Aramco's public listing in 2019, which brought and raised $29 billion. So this would make it like the largest IPO ever in terms of capital raising.
One thing I find interesting when you start using numbers like trillions, I don't think most people understand how big those numbers are. And what I used to tell the kids when I taught math is I'd ask them, how long do you think it takes for 1,000,000 seconds to go by? And they'd kind of think about it. And it's really a little over 11 days for 1,000,000 seconds. How long for 1,000,000,000 seconds to go by? About 32 years.
Wow.
For 1,000,000,000 seconds. How long for 1,000,000,000,000 seconds? 32,000 years. So remember, 1,000,000,000,000's 1,000 bigger than 1,000,000,000. And that would shock the kids. And if you think about things like our debt as a country, right? Trillion is a big number, much bigger number than 1,000,000,000, and 1,000,000,000 is a much bigger number than 1,000,000. So just to give some clarity on how big a $1.5 trillion valuation is.
It's scary to think about especially when you frame it in terms of that, and then you think about our debt, and it's like, oh man.
Yeah.
But switching to a more positive note, if this goes to a 1.5 trillion, and if they cash out here, this would be a 123x return. So 123x bagger is very good. 123x bagger on a $900 million check is extremely good. So, and Google already reported an $8 billion gain on their Q1 financials, Q1 2025. That was 25% of the company's total net income. So at that point in time, SpaceX was raising some capital early last year. And so there was a one-time $8 billion gain that they had to recognize on their books for GAAP accounting.
And this is really the only game right now for SpaceX, right? I mean, they're having some people trying to compete, but it was NASA and then SpaceX.
Yep.
No one else really.
Yep. Spot on. So right now the launch services is less than 30% of the revenue, but they have 90% market share. So you got Blue Origin from Bezos, right? You've got some other ones that are trying to compete, but they've got a 90% market share. And like you said, they've essentially replaced NASA, but the bulk of their revenue now is actually Starlink. And so Starlink has that. I don't know if you caught that they've got a deal in place. I believe it's with T-Mobile that they're going to actually look to compete against the Verizons of the world. And so they're going to actually be able to provide like a competing cell phone service in addition to the Wi-Fi service that they provide. So Starlink has really turned out to be a huge, huge business. And the rumors of that was about this year that they're going to do about 22 to 24 billion in revenue. So, I mean, a 1.5 trillion, if they hit that, that's 63 to 68 times forward revenue multiple.
Wow.
I would love my business to be valued based off of that.
Yeah.
Our business to be based off that.
Yeah. I was going to say your business ties to my business, so that would get me excited too.
So takeaways for entrepreneurs, I think, I go back to just venture capital portfolio creation and structuring. That in order for venture capital to make sense as an asset class, you need to hit home runs. Now, granted, this is a grand slam, not just a home run. Ideally, you're trying to get like a 10 bagger, not a 100x bagger, but you're going to strike out a lot. And so I always go back to talking in the framed entrepreneurs when we're talking about venture capital, which this was part of Google's, venture capital portfolio. They're making, tons and tons of bets, and that set a budget and then get at least 10 different bets, knowing that several of those are going to strike out to zero, and you just hope you have one 10 bagger. And so then you're hoping your net IRR over a decade is about 20%, So that's kind of a takeaway for entrepreneurs, is that sure, venture capital could make sense, but where I see a lot of entrepreneurs fail here is that they have a buddy, a friend, so-and-so just sold their business, they're going to start something new, and they write one check or two check, 25 grand here, 50 grand there, and they got a hodgepodge of maybe 3 or 4 deals, and they all strike out, and then they're really disenchanted. And it's like, well, there was no rhyme or reason. You were just writing checks based off of vibes, and so there was not really part of a intentional portfolio construction.
When I hear this, it almost makes me cringe a little, because when you see a home run like this, it fuels the spirit of entrepreneurs wanting to invest in venture capital, because that's the most exciting thing. If you're early on SpaceX, that would be wildly exciting. The problem is that's what is in the headlines, but the dozens of companies that tried to do new things that lost all their investor money, they don't show up on the headlines of the paper. And I have to tell you, and with being 30 years as an investor, the thing that gives me the most concern is when I see a pre-revenue deal. So when there's a pre-revenue deal, that goes on the back burner, and that does not excite me. It's interesting. A guy I know here in town, Peter Thomas, who's a very successful guy. I met him through my friend Joe Polish. He built the Four Seasons up in North Scottsdale, and he has a storied history of being a very smart investor. And one thing that I heard him say not long ago is that he used to, when someone would come to him, a friend, hey, I have this investments, and he'd look at it and he'd go, oh, it's only 25,000. So he'd throw that. Oh, it's only 50,000. It's only 10,000. And he said after a while, he started adding up all these deals he threw money in that he lost money at. And so he decided he was not going to invest in anything that didn't get his full attention. So he said what he does now is if someone comes to him and says, hey, I want $25,000 for this startup, he says, how much are you trying to raise? And they might say 6 million. He goes, I'll tell you what, I'll take the entire 6 million or I won't give you anything, but it's got to go through my team and my process. And he said that prevents him from doing all these little dumb deals that clog up his inbox with K1s at the end of the year and also usually are not vetted, and he loses his money. So that's kind of some of my thoughts on VC.
Yeah. Wow. And I hope that I'm not a big VC guy. I know we've talked about this in the past, just because it's with how much long the money's been tied up, the DPI, which essentially is the return to investors. A lot of it's been paper returns over the last few decades, and the NASDAQ's been performing essentially just as well as venture capital as an investment asset class, both all the liquidity. So I know, as much as I dream about a 123x return, right now as Warren Buffett, as I'm saying, I'm just watching the balls fly by, and I'm just, waiting for the fat pitch, because to me, it just sounds like too much headache, too much work. And I don't want to put the time and energy into like building that type of portfolio out.
Yeah. And you know what? It really is about the allocation and making sure that you're doing it in a disciplined way. And if you're going to put money in VC, whatever it's going to be, 3%, 5%, whatever the overall portfolio, you got to stick to that and not just throw money at every deal that sounds good, because I've never met a deal that didn't sound interesting. And the idea, if I love the idea and I like the person, I want to put money in there. And that's a recipe for losing a lot of money.